Welcome to another episode of Real Estate Investing Explained. Here's today's question. As a real estate coach who works with a lot of new investors, what type of investment strategy would you recommend for a new investor to jump into given where we are right now?
My go-to, there's so many different situations for different people, right? And so one of the questions I would ask somebody if they're just getting started, I would say, like, why are you getting into real estate? What is real estate? What are you hoping it'll do for you? And some people are going to answer, like, I want a side job, like I want a side hustle that's going to make some extra income right now. And the answer for that person is very different for the person who says, I have a full-time job, I'm making good money, I'm saving a lot of money. I just want this to be a side wealth builder. Like I want to put my money into real estate and wake up 10 years later and have a lot more money than I do right now. And so depending on what that person said, they said answer A, where they're trying to make a side hustle. My recommendation would be to get your real estate license. And that's not actually what I did when I first started. I wish I would have, though. I wish I would have got my license earlier. But I've become a professional. Like, try to be the most knowledgeable real estate person you could be. And you get your license, you get in the market, you learn about sales, you learn about rental prices. Just become the expert in one little slice of your local real estate market and know it better than anybody else. And by doing that, you're going to be able to add value to whoever the clients are that you work with. And you might choose to do what I did, like go out and find deals for other investors. And in that case, you'll make some really nice commissions, or you'll make some nice partnership deals with other people because you're that expert. And so that's my recommendation for getting started for somebody who just wants to make a career out of it. But for someone who just wants to get in, invest in the market, one of my favorites is always going and looking at your residents. So especially if you're younger, 20s, 30s, but even people who are in the retirement age, you can look at your residence where you are right now, and you have to live somewhere. And so I love the house hacking strategy, where you look at instead of moving into some big, huge house that's just a drain on your money, it's not really an asset. It's a liability. Look at your house like an investment and say, how could I generate income from this property that I live in? And the classic way to do that, like I moved into a fourplex building when I was 24 years old, and I lived in unit number 2, rented out number 1, number 3, and number 4. And I had $1,200 a month coming in. These were low rents, even by South Carolina standards. But I had $1,200 coming in. I had about $1,100 going out, all in, including repairs, taxes, insurance, vacancy, my mortgage payments. I was living for positive $100 per month, living in a property, and a property that's appreciating, and a property that has equity in it. And I had friends that were out there paying $1,200 a month to live in some dream house when they're 25 years old. And the difference between those two paths is just enormous. Like, you start looking at the time value of money and compounding and everything else, by making a choice for like 5 years of your life, a house hack, or at least just to live more reasonably with your housing. It's that one choice is just enormous. So I would recommend people start with that and start thinking about it.
That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.